Hi, this is James Scott with Princeton Corporate Solution, and today I wanted to go over taking your company public as a step-by-step process on how to know if you're ready to go public or just the different mechanisms at play when going public. Today we're going to focus for the most part on the OTCBB. First of all, how not to go public. You never want to use service brokers because they you can't, at the end of the day, you can't hold them accountable. You want to use an all-inclusive in-house service, with obviously the exception of outsourcing the third-party PCAOB audit or the market maker, or there are certain things that you're going to have to outsource, but for the most part the process should be with the consultant, and at the end of the day you need to be able to hold them accountable. Another way not to go public is reverse merger, especially without an in-depth background search. Most reverse mergers are into shells that are dirty, or they have liens or angry shareholders, or the shares are just completely depleted. There's liabilities that may not have been filed as liens yet, but they will be down the road. You want to make sure that you're not inheriting a bag of fleas, so to say. Next, you definitely don't want to attempt something like this on your own. You want to bring in professionals, or the process will just go on and on and on, and it will be extremely expensive. You want to stay away from front-heavy, fee-oriented facilitators. The industry average for something like this is a retainer of $35,000 to $50,000, with the rest being taken in equity. Obviously, going public, the act of getting a symbol is the smallest and easiest part of the process. So if you hear people say, "Oh wow, I can take you public for 50 grand and no equity, blah blah blah," well, good luck, because that'll never happen. There's so much work as far as pre-public structuring, post-public merger and acquisition, and subsidiary merger and acquisition identification and facilitation, investor relations, publicity. There's so many other elements at play. It's really impossible to do it for less than $35,000 to $40,000 to $50,000 in retainers, because there's a lot of travel involved when you're putting together a board of directors and recruiting professional CEOs, and a lot of the equity will be in free trading shares, so that you don't have to keep coming out of pocket to pay the consultant. So you want a consultant that's obviously done this before several times. Anyway, don't try to go public, like I said, without a public structure in place. We're going to go over the public structure here. Again, getting the symbol is the easiest part. It's what comes before and after that's the most difficult. Now, structuring a corporate entity that's primed for going public, first of all, you'll want to have a board of directors with a subsidiary second level advisory board. You want a well-pedigreed C-level management team, CEO, CFO, COO, strong relationships with active strategic alliances to share the burden of going public with the investor relations, the publicity, share your inter-industry strategic partnerships to help each other. Only real win-wins work when you're structuring a company to go public. You want a capitalization model in place for both short-term and long-term, and make them realistic, not pie-in-the-sky numbers, as shareholders and market makers will identify these pie-in-the-sky numbers and just pass over it, and it'll become difficult to market your stock post-public. Marketing your stock and creating volume is how you'll be able to cross-collateralize and monetize being public and getting the capital that you need to actually grow. The above, again, is just the minimum requirements for a solid corporate foundation. The process, step by step, in general, Obviously, there's little incremental aspects in between each of these, but in general, going public on the OTCBB, you pretty much need a solid business plan. Outsource it. Don't write it yourself. You won't even get up to bat if you try to write it yourself. It's almost guaranteed. A professional authoring facility will identify who your target market will be, and they'll write the document to cater to what they're looking for in the current industry trends. You'll want a professional corporate valuation done with a solid underwriter, licensed, of course. You'll want a solid equity distribution mechanism that's compliant with all of the solicitation guidelines. Most popular equity distribution mechanism is Regulation D506. Obviously, the shares are then filed with the SEC via transfer agent. You'll need a PCAOB audit. The price of this varies. Depends on how new of a company you are, how established, and what your books look like. Then you'll need an S1 attorney to file your S1 with the SEC and go through comments. You'll then need a market maker to file your 15C211 to get a trading symbol from FINRA. Then you'll need a rollout date, which is also considered an IPO, the initial public offering date. You'll need to do market prep as far as publicity and general industry prep. And then you're going to need a solid investor relations strategy to be initiated on the rollout date. And be careful not to pick pump and dump schemers. There's so many of them in the investor relations sphere. Post-public strategies are extremely important because this is what's going to dictate your success as a public entity. You can't grow a public company organically. The only real way to grow is through, obviously, extensive PR and IR, as well as implementing acquisitions and mergers into your corporate process ongoing. Obviously, each of these will get their own PR, IR wrap, so the investors and the public will know about these acquisitions and mergers, even if they are in the process. You can get generally about 6 months of hype and market excitement before it happens, so really get as much PR and IR as you can. You want to generate expert status for your C-level executives. They should already have this going in, but you want to take and build off of what they have, getting them on expert panels at universities, get a solid podcast going, a solid corporate blog, as well as industry interviews on TV and radio that have the company name and the trading symbol on the bottom left-hand corner. Or if it's on the radio, you want it announced. So the board of directors immediately post-IPO should be extremely active at this time. You should be constantly setting up strategic alliances, getting introductions to potential strategic partners, and this facilitation and interaction with strategic partners and potential alliances should be extremely aggressive and organized, structured, and targeted. There should be publicity wraps that should encompass the individual services, products, new relationship, board members, and affiliations for the company as well to expedite growth. If you have any questions about IPO facilitation or dual listings on the OTCBB, Frankfurt Exchange, London Exchange, or getting your Pink Sheets company upgraded to the bulletin boards, or the bulletin boards upgraded to the NASDAQ, and you need a solid underwriter for this project, give us a call. We can help. We're a full turnkey facilitator. Thank you very much.